Well, for more on JPMorgan's results this morning, we're joined over the phone from St. Louis by the Bloomberg Best on JPMorgan, David George. He's a bank analyst at Robert W. Baird. David, thanks so much for joining us. I know JPM also beat your results, or your predictions as well, at 118. What do you make of this? I mean, it really seems to be the top line that everybody's focused on.
Yeah, in this kind of environment, we all know credit's getting better, so revenues are really the key. And JPMorgan overall posted better revenue than expected, largely due to strength in the capital markets. There's been a lot of concern about weakness there, but they were considerably better than what we were expecting in capital markets this quarter.
So have we turned the corner?
Well, I think that certainly the environment continues to kind of chug along and show moderate improvement. That we would like to see a little bit better loan growth, not only out of JPMorgan but out of the banks overall. JPMorgan is continuing to run off Washington Mutual assets, and that's making balance sheet growth difficult. But certainly the company continues to execute very well, and I think is well positioned.
Now, this loan growth issue, which I know is prevalent for all the banks, not just JPMorgan, is going to be difficult. I mean, we just had Mike McKeon telling us that economists are slashing first quarter estimates across the board, essentially. That's not good for loan growth going forward.
Well, sure. We're coming off of a big deleveraging cycle, and certainly asset growth is going to be one of the main focuses of investors in this sector. And the good news is JPMorgan is continuing to take share, it looks like, in its corporate bank. And corporate loans at JPMorgan were actually up 4% from the fourth to the first quarter. So pretty encouraging, and the company continues to generate a ton of capital. If loan growth does not come back, would expect meaningful buybacks and more dividends out of JPM.
Is that corporate borrowing consistent with what you're hearing about how companies are putting some of their cash to work and hiring?
Well, we would expect to see improved commercial loan growth really across the board, and it makes sense from an economic perspective. Sales are improving at most corporations. Inventory levels, both due to cost pressures as well as higher sales, are increasing. So that should necessitate, we think, more borrowing on the part of small, medium, and large borrowers from the banks.
But for JPMorgan, though, is this the best we're going to see for this quarter among the banks, or you expect that we might see some better numbers as we get into the earnings?
It's going to be, I think, a mixed bag. Certainly some of the regionals, I think, should benefit from this improvement in commercial loan growth. And I think that for those banks with more capital markets operations, the implications from these JPMorgan numbers, I think, are favorable, because I think expectations coming into these numbers are relatively low, and I think you may see a rally in the banks and financial group as we go through earnings here. Right.
You have an outperform on JPMorgan, right?
Yes, we do.
Okay. Talk to me then about how you integrate, though, the overhang of litigation costs and the regulatory framework in that.
Well, sure. This is a difficult environment, as you mentioned, Betty. But this is not new, and JPMorgan continues to operate in a difficult environment relatively well. And a lot of the issues that you refer to, we think at least, are largely known by the market. This is the expectations are low at only 9 times earnings, and these guys have a very strong balance sheet, and I think we should continue to see the stock grind higher over the coming months.
But some might say, though, it'll be hard to see an outperformance out of any of these banks if you still got housing, you still have the housing market in the doldrums, essentially. There's no recovery there that we see so far.
True. We would certainly love to see housing improve, largely because of the positive economic implications associated with that. But the good news is the sector as a whole, and JPMorgan in particular, has very strong capital levels and is generating very good profitability with housing prices down 30-35% from the peak. So another 5 to 10% down, it doesn't really concern us at the margin with JPM.
Okay, David, thank you very much. Really appreciate it.
Take
David
care.
George,
Thank you.
You too. Robert W. Baird talking about the JPMorgan results.